if you find critical vulnerability on my infrastructure, I'm going to pay you some fees. This is the basic logic. Why it's so critically important in the Web3? Because you have almost all of the time all your assets at stake. Web3 vulnerabilities are all the time about the money, and all the time about all the money that are inside your smart contracts, inside your infrastructure. That's a huge difference. That's why there is a saying that if you are a startup, you need to move fast and break things. And this is very logically very correct. In Web3 infrastructure, if you're doing like that, you are losing all that you have. It's all assets that are of your customers, of your investors, of everyone. That's why in Web3 infrastructure, taking security seriously from day one is very, very important. Yeah, and Hacken started as a bug bounty platform, and now successfully is the second biggest bug bounty platform in the Web3 ecosystem, but it's one part of the bigger business picture.
How did you get into that, or for how long have you been working with them? What was your...
Yeah, my background, I am at Hacken at the role Chief Product Officer. I'm responsible for R&D and building the products inside. I get to the blockchain with the idea to build very good and valuable products inside, because previously I was working in the antivirus for B2C, VPN software, and it's a very big crowded niche, but all that you are doing there, it's you are improving the percentage of the detection, percentage of the conversion, and so on. Blockchain looks very promising, and now with all the regulation, it needs products. It needs very reliable and like security software, and I will explain you why a little bit later. After that, Hacken entered in smart contract space, making an audits. It's not the financial audits, of course. It's manually, automatically, with different fast testing, ability to verify that developers haven't let any types of vulnerabilities left inside the code, and that the system works as expected. Yeah, successfully finished almost 2,000 different projects with the audit. It includes not only smart contracts, but audits of the whole blockchain. So it's a very low level security assessment for the huge part of the ecosystem. Doing penetration testing, of course, on the Web3 elements, and has very big and bright community. So near 2.5 years ago, we start thinking, okay, we have these bright minds, cybersecurity engineers. How can we not just make an audit once in a time, but capture their like knowledge inside some software, inside some systems that can help constantly, not once in a time. And we start building Extractor based on the all types of vulnerabilities that were detected during history of the hacking, all types of reports that were submitted by white hackers to our bug bounty platform. We implemented this as knowledge and as understanding how exactly attack is happening, how exactly to spot the attack in Web3 and in the very early stage to prevent hacks from happening in this ecosystem overall.
How exactly, because bug bounty means there's a human being sitting in front of his or her computer and trying to trick a system or to hack a system. When you tell me, so their procedures went into a software, how would you technically convert that?
So each smart contract, it's the automatical piece of code that is executed under some conditions.
Yeah.
This piece of code has a number of functions that needs to be executed. Each function has different types of risk. So basically, going back 3 years, we analyzed each hack that happened in the ecosystem and understand, okay, what types of actions hacker did to execute the attack. How exactly we can verify the attack on very early stage, and we put it in our detectors to spot the early signs of the attack. And of course, with all this knowledge and with all vulnerabilities, we try to train it as much as possible to have the earliest possible detection.
All right. To what extent is that AI, not AI, all AI?
I would say that the topic, and we're utilizing AI a lot, but not constantly on the detection level. Because what we are doing, we're giving you ability to automate your reaction. And automation of the reaction, it's potentially a pause of the smart contract, that it's like stopping the whole system. Go on.
Just a question. You said that you were feeding new ways that people have hacked before.
Yes.
How do you prevent new ways of hacking?
Yeah, I will tell it. Very good question. Logically, there is all the time 0-day attack. One of the functionality that we are developed and implementing right now is the ability to simulate the transaction, to oversee what is the result of the transaction, and after that to decide, do we want to execute it or not. The function called firewall, we're using it, our competitors are using it. For now, data shows that it's 99.5% of the attacks can be prevented because you understand the state. At the same time, it's not about blockchain, because you are completely control all the transactions, and it's a very centralized way of security. Go on.
One question. The difference, as I'm not an expert totally in this field, but Web 2, as I understand, is more central. I have an overview of the flow of everything.
Yep.
Web 3, I have this decentralized thing. And in this decentralized topics of the money and everything, I cannot understand how you are able to overview all this, because this decentralized makes it nearly impossible to know when there is starting something, because you don't know what has happened before and the steps before. So how do you manage this?
Yeah, for example, one of the easiest example, each action in the blockchain happens with a transaction, and the transaction is signed inside the blockchain. All blockchains, so we now monitor in real time 23 different blockchains. They produce crazy amount of data. We are not analyzing each and every transaction, because transaction is just like record, but you need to understand what is behind this address. Is it smart contract, is it wallet, and how exactly operations are happening. But the logic is that we are analyzing if in, for example, new contracts that were deployed, your address as a project that we are protecting inside. Because if, for example, the steps, if someone used the mixer it's the system that tries to anonymize the root of the money. If someone used the mixer, after that they took the money and tried to fund the contract that has your address inside, very high confidence that this contract is going to attack you. And we are automatically submitting some alerts to the system. You can receive it on your email, Slack, Telegram, anything. And for you, that we have high confidence, you can decide, do you want to make some actions manually, or you can initially develop some automation actions. For example, if you are receiving alerts with a very high confidence that some anomaly is happening, and like I will tell you a little bit more about what types of anomaly. Okay, for example, someone tries to change the ownership of your contract. Someone tries to upgrade it, and it's not you. There is some AML safety activity that you don't want to interact with. You can program the actions to be automatically stopped and decide how exactly you want further to react.
I ask a question. If you can stop the contract, but then it's not decentralized, it's centralized. If you can have a do anything with your contracts and change the ownership, then for me it's not decentralized anymore. It's like a centralized platform.
Then. The less and less contracts right now are not upgradable. The less and less, because our foundation or the company who is owning it wants to have ability to release the updates, to make changes, and the system is becoming definitely less and less decentralized. But the regulation, for example, like MiCA and DORA, they are now dividing all the contracts if there is an ownership of them or if there is not. If there is not ownership, they can assuming that it's DeFi and it's not under MiCA and DORA. If there is an ownership of the smart contract and team can influence on it with treasury and everything, they're assuming that it's a centralized entity.
I was thinking, of the 2,000 audited projects, did any of them have any errors after you audited the project?
Of course.
How many?
It would be very hard to say. I will explain you right now. According to the old data from 8 years, the company had 8 incidents that were the company was hacked. But what you need to understand, that the Web3 projects, it's not one smart contract. It can be system with dozen contracts. Most of the time, 70% of infrastructure is Web2 infrastructure, and only 30% Web3 infrastructure with their smart contracts. To confidently say that after an audit, something was hacked, you need to understand that this exact contract was hacked and this is the end result. What we do right now as an auditor, we are taking smart contract to the audit. After that, we are taking 80% of money that was paid for to us and putting the contract to the bug bounty and saying, all white hat community, if you can find the critical vulnerability after our audits, we are giving you 80% of the money that we earn. This minimizes the chance that we miss something a lot. After that, if clients eager, we are putting this on monitoring, and I will tell you why it's important to minimize any possibility of vulnerability overall.
What is the amount that they get? Because if they get more for hacking, like 100 times the amount, then
they are always get more from hacking.
Okay.
Always.
Oh.
It's not even.
If we're talking like 10K and you get like 5 million for hacking, of course you're gonna hack it rather than.
Of course, you're gonna end up in jail. And here you want. So, you know, trade-offs.
For 5 million, for 5 million, a lot of people go to jail for 5 million.
Yeah, but then
we have a huge community of bug bounty hunters, white hats, and it's their job. They are good guys, and they don't want to end up in jail. But of course, by hacking systems and taking all the money, you can get much more. It's not even a question. You cannot give all the money from your TVL because it's not project's money. For example, today Web3 projects, they can operate with hundreds of millions, but it's not project money. It's money of the community, of the stakers, of the asset managers. So, yeah, of course.
Your bug bounty program is like similar to Gitcoin then? Or is it?
I don't think so. The closest competitor is Immunify, maybe you know them, or Bugcrowd, or in Web2, this is
But it's always a fixed community. Do you have? Do I have
No.
to qualify to become a potential bug bounty hunter, or?
Yeah, how it's happening?
CV.
You are publicly putting the scope and the conditions.
Yeah.
What exactly you want to be tested, and what are your conditions for the payments? Our team is verifying this and making sure that conditions are real, because, as you said, no one is going to put their effort if the reward is too small. We are validating, communicating with you, and after that, everyone who is registered, who is in this community, and we are promoting it all the time, can try and submit the report. We are verifying these reports manually, automatically, but if we see that yes, this is really vulnerability, we are communicating with the hacker and we are communicating with the client. So, yeah.
Okay.
And it's constantly
Maybe
changing
we
and growing.
continue a little bit, because I think there's a few more to come.
One
Even
very interesting fact of those 80% bringing back. So you want to indirectly say that you're operating in 80% margin.
No,
That's a lovely business. Invest right there.
if it was like that, but of course not. We are taking these risks to improve our quality, because we understand if there is a hack, all that auditor has is its reputation.
That was just a joke.
It's just the question, what percentage are the payments, and this is our math. But there's also a gamification underneath.
Can you somehow categorize what are the most typical entries today for hacking Web3 projects? Is it? I would assume that there is some kind of fashion or some trends, or is it stable, or do you find each and every month new
From the
kind of entry?
From the project perspective, or from the vulnerability?
From the hackers' perspective.
Yes. So we also making each quarter security report about all the hacks. As I said, we are taking each hack and putting this under microscope. During 1.5 years, the most, the biggest use case and attack vector is access control. And it's very similar to the Web 2. What's happening with the Web 2? What does it mean? It means that hackers right now seeing that to break the smart contract becomes much harder, but to break a person much easier. That's why they're becoming to use Web 2 tactics, sending the information to LinkedIn, like sending the new opportunities and so on and so forth, to get the access to the system, to get the access to the keys, and to basically execute any type of the attack that is possible.
But this kind of attack is not the one you are focusing on, because you can't
no, we are doing
the
this
human
as well. We are not protecting the human, but we are protecting the state. Each execution inside, they have also steps. For example, the case of the Bybit, it's just the numbers that you need to understand. Almost 2 billion were stolen just in Q1 in Web3. The Bybit case, I don't know if you knew about this, it's centralized exchange using the access control vulnerability by like third-party manipulation and so on. Hacker could steal 1.4 billion in like very short period of time. How they did it, and I can show you how exactly we reversed and simulated this attack inside. So basically, when you have so much money, you need not only one person to sign the transaction. You try to decentralize it and minimize the risk. So you use a couple of signers, But what's happening with the signatures, it's not even Web3 component, Web2 component. And the system that we built, it gathers all the API oracles and information from the Web2 and Web3. And by combining this, we see the picture of your infrastructure and gives you ability to understand, okay, is this state of your infrastructure good or your infrastructure becoming under risk? By combining this, we give you the full picture of what's happening. And this is how we give you ability to automatically execute an incident response plan. Yeah, actually, this is the access control is here as number one exploit.
So do I really understand access control? That is means the human.
Yes.
So it's the typical thing we know from virus topics that the education to the human who is interacting is the most important. And there we could maybe have a little artificial intelligence supervisor saying, oh, what is this password? It's not good.
It's not about the password, how it's end up, and there is no difference in Web2 and Web3. Humans are tricked and they believe that they are doing the right thing. And our system tries to spot what's happening with the infrastructure, even with the very good intent of the human. Is the condition right or wrong? And what's, I believe, our uniqueness, because we are almost 8 years on the market, it's the understanding of all types of risks that are today in the Web3 world. All states that are positive or negative. And so this risk framework is giving you the possibility to create this picture. And this is actually what exactly DORA requires from all the companies who are applying for the license.
Everybody knows what DORA stands for?
Digital Operation Resilience Act.
The interesting part is that on the one hand side we talk about computer, IT and hacking. On the other hand side, more and more the regulator in the EU is trying to build a framework on how to compliantly and securely operate digital structures. And accordingly, so there's the MiCA regulation, which explains how CASPs, crypto asset service providers, have to undergo their services. And all these companies that are somewhere in between the financial services area and the crypto space, I'd say. And we just talked about one of these German startups, 21X company that recently got the first license as for offering a digital DLT infrastructure to have a trading venue for digital securities, which is kind of top-notch. And to do that, you need to have a MiCA license, and one German company just recently got it. However, the very moment you fall under the regulatory environment, you have to comply with certain further regulations, amongst them DORA, which has been around for 3 years.
No, it's live.
It's going live on the 1st of, it went live on the 1st of January
17th of January this year.
Yeah, but that was, and this is the Digital Operational Resilience Act, which requires each and every provider of financial services and auxiliary services in Germany to set up a system which identifies risk which in their computer space, digital infrastructure, with very dedicated documentation requirements, fallback options and all that. And essentially Extractor started with this bug bounty thing, and it's more and more developing into a provider. I mean, let's talk about your product a little bit more to understand how complex is that. And all the financial services companies at some point in time need experts to help them mitigate or just handle the risk, the hacking risk?
Yep. I will cover two use cases. The big one is from the regulational side, and second one from the project side. Yeah. So if we are seeing current challenges from the digital asset managers, they definitely try to understand what type of assets are more reliable, what less reliable, how the infrastructure works. It's not just about the token, it's about the product beneath it. Regulatory and complexity, it's about the new regulations that are coming, and they have very similar but at the same time differences inside. We signed as a client the regulator of ADGM. It's Abu Dhabi Global Market in Emirates, and doing with them very interesting work. I will explain you a little bit later, but basically giving them the opportunity to oversee every licensee inside the blockchain because of the nature of blockchain transparency. Security and technical, we are speaking here a lot about this, but Web 2 security, it's very different from the Web 3 part, and you need to understand it and work with it. And of course, it's operational and communication, because regulators asking every licensee to report the critical incidents in 48 hours if they, and classify the incidents with the root cause analysis and ability to fix it and to be never happening again. I will start with the dashboard. It's much less technical, but what it provides, and on the specific topic of the ADGM. How we worked and what we are doing right now. The regulator had a goal. We want to oversee each and every licensee during the license period, and we want to make sure that they are not violating our requirements. It's very logical and clear request. But if it's very hard executable in Web 2, in Web 3, we can put on the monitoring all their smart contracts, all their infrastructure, and basically understand each and every action, what they are doing and how they are interacting with everything. With specifically DLT foundations, it's more on the layer ones, what exactly are the requirements? The tokenomics is something that Web3 project is promising to do. And like saying, for example, we are going to release this amount of tokens. It's our digital currency. We are going to distribute them fairly. We are going to unlock them step by step. But to make sure that it's not just promises to the community, to the regulator even, we are mapping the smart contract that is going to execute all these promises on chain automatically with the promises that they are giving, with the time and conditions that were written under these promises. And it's...
What is the underlying asset for those promises?
What do you mean by underlying asset?
Like, what is there if they go bust, right? What is there?
Regulator immediately understands and revoke the license and penalize the company.
Yeah, but if the company's busted, so with what you're going to, like in financial industry, right? You have to lay down some capital, right? So what are those companies obliged to lay down? What kind of
from
promises? Financial promises.
For the DLT Foundation right now, they have some capital inside, but I am not sure what amount to tell you about this.
All right.
From how it's structured right now, a regulator immediately understands the violation and revoke the license. I don't sure about the financial, like all the settings up there. But it's just one point. For example, second one is that the infrastructure should be constant under the relevant audits, and if they upgrade some functionality inside, it should be in shorter time also audited, and there is no upgrades without regulatory understanding. From one perspective, it's why is regulator is looking under my infrastructure so precisely. But from the other one, because we are doing this in very non-technical manner and alerting only on the critical events or preparation for the critical events, it's not hard for the regulator, and it's not very obliged from the company, because we are just monitoring the things that are openly inside the blockchain, and it's mostly about the operations. Do you have any questions on this? I will go with the use cases.
May I ask a question? Are you auditing the smart contracts after deployment or before the deployment?
Before the deployment.
Before
Yeah, because after the deployment, everyone can basically utilize
exactly.
the vulnerability. Yeah, so what the digital assets monitoring looks like? It's about the financial risks, and it's not only about even cybersecurity. I was telling you about the patterns of how exactly are hackers are behaving. Most of the time, they try to find inefficiency in your mathematics. For example, with lending protocol, then you are giving as a collateral like 2 bitcoins, and you can get 1 back, for example, or the equivalent of the money. Huge amount of protocols were hacked just because they were not calculating properly some cents after after comma, and this financial inefficiency constantly is testing by the hackers, and they are testing it with very small numbers, not putting a lot at stake. And when they are finding how it's working, they are of course utilizing this vulnerability as much as possible. Around 3 weeks ago, or already a month, the decentralized exchange was during 6 hours constantly attacked with the failed transaction. The successful transaction was on $25, but because the company, as a company, they haven't had the constant monitoring of their infrastructure, they even didn't know about it. After $25 transaction, next one was on 3.9 million, and hacker successfully end up with all this money. Yeah.
So for use services, I would assume that there are at least 3 parties involved. One being the potential client of a digital or DLT service provider who would like to have a certificate that the smart contracts run properly. Then I would assume that there is the provider itself who wants to be sure that he gets an alert when something irregular happens, and to avoid that. And then it's the regulator. From your experience so far, who is the most attractive client for your services?
I will tell you, answering your questions, but a little bit from different angle. Why audits become something that is very needed and well known?
Yeah.
Because Texas and the platforms that are launching tokens, they were asking projects to deliver them an audit as an assurance that the project is somehow safe. But because the technology was developing constantly, it became definitely not enough, but it's still a narrative. And audits are still required only because it was required by the community. By the taxes, it was becoming a trust of the like end token buyers. But right now, company who are showing you an audit saying that we are safe, they are a little bit misleading you, because you have no idea what percentage of their infrastructure was audited, what's not. And we are using constantly the Swiss cheese protection model. I don't know if you're aware of it. Each security layer, one way or another, have some holes. But what you can do, you can put as much security layers as possible all together, not to have holes at all. And this works with Web 2 and this works with Web 3 as well. That's why audits, it's only one layer, and you definitely need to have several of them. Yeah. That's why we are providing our services to the Web 3 projects. Now to the regulators, but of course we want ecosystem to be safe, to become safe, as safe as possible.
Maybe we move to the live demo, because I'm
Yeah.
assuming that this is even, I'll push you, just
Yeah.
I think there will be more questions as soon as you have...
Can I ask you a question about Cetus hack on Sui blockchain? Could your solution protect Cetus from the hack?
Definitely.
But can you explain how?
At the moment,
Maybe we do that later on, because this appears to be very specific. I just want to, sorry to,
Okay,
to
sorry, no worries.
postpone that, but
yeah.
to
So,
get you out of the red line of...
with all the things, it's about financial, it's about detection, it's about economic risks, basically different types of risks at the Web3 project. And who are the clients of the not technical monitors? It's portfolio managers, risk analysts, compliance officers, market leads, and crypto regulator. It's the people who needs to overview the general state of the like market and understand their risk. So this is the Uniswap project. Basically, it's one of the biggest project in the crypto ecosystem that allows you to directly like trade your tokens and do basically direct, without any third-party involvement, exchange, buying, selling, and so on. Decentralized exchange. How are exactly we are monitoring it?
And so they are a client of yours, or what is the relationship?
They are not client, basically because, again, because blockchain is completely open.
Yeah.
We can oversee each contract, we can monitor it, and we can understand the risk, what's happening there. We cannot monitor something that is inside the closed environment. There are also such projects, but these projects are less and less desirable by the community.
We are only doing ETH at the moment. Ethereum.
We are doing not Ethereum as well, but to implement non-Ethereum blockchains, it takes around 2 months of work. We are operating with 3 non-EVM blockchains right now.
And do you also analyze projects you are not told to do? Or, I mean, do you monitor everything? I mean, you do not need to have a contract with a project to do the monitoring, right?
Yes, we can do it. It depends on what is your needs. For example, for asset managers, we can analyze pools or dexes or build the risk scores under any type of Web3 project if it's publicly available. Most of Web3 projects are publicly available, and all the interactions are public on the blockchain. So if we are going to any type of contract, we see different types of the events, and we see different types of monitors. Inside the security monitoring, I will just show you quickly the type of the detectors. We have developed different types of detectors, why there are around 60 detectors that you can implement. And the attack detector, it's what I told you, it puts all his knowledge into predicting the very early signs of the attack that is possible. We are putting Web 2 and Web 3 here, so you can basically detect everything. I will not stop on each of them, but basically we try to understand the functionality of each asset, what type of risks, and on each risk there might be one or two detectors on top. So to see the risk from different angles, only at these conditions you can see the full pictures, what's there. Advanced I will not touch. Compliance, what's important inside the compliance monitor, it's basically the AML and CFT. It was might be the clearest. So any interactions with the stolen money, any interactions with the OFAC list and everything, you as a Web3 project, you don't want to interact with them. Basically, we give you ability to see it, to spot it immediately, and to decide, do I want to block it? Do I want to report it to the regulator or not? In the world, there is only 6 AML providers. We are not one of them. We are working with a partner, and we're implementing this inside our system to provide our customer with this information. Only by having AML, anti-money laundering, basically labeling, you can be compliant with a MiCA license. And of course, you can make any type of action. And how exactly? It's about the condition and it's about the execution. So you're saying, if you spot any type of AML action, please add this address to the block list. And after that, don't interact with anything, any address that is inside block list.
But the action will go through, I mean, or will not go through, because when you execute in a block, then is it possible to stop it, or you only can stop it afterwards?
It's going to the next block. You cannot make it at the same block, because the block is giving you ability to understand the state.
So if something goes to blacklisted address, it could go, but just once.
I will explain you on the exact example that we're using. Bybit hack. We built, I will not show it here, but we built the system that in real time goes through all the stolen money and all the transfers of stolen money. So we're building the tree of addresses. Each transfer, it's the one block. We automatically see it and adding it in the block list at the next block. So it's real near in real time, but there is no chance that you can add the new address at the same block. So it's just impossible. That's why AML providers, they are criminally obliged to make the labels 100% true. But we give you ability to do it in real time and not to interact with the money that you don't want to interact. And I will show you just very quickly the how exactly we are working with ADGM. Basically, this type of monitors, each of them has their own methodology inside, and it's their requirements. If we are going to build something like this about DORA, we are now speaking with the Bermuda regulation, Turkish regulation, and there is different type. But basically, we are building a dashboard for you, and you are seeing each day, each hour or minute, everything that is happening with your infrastructure. Where are the risks and how do you want exactly to react to them? Yeah, that's. I will stop on this. I don't want to go deep because it will be not clear inside.
But when looking into this dashboard, it reminds me a little bit of a typical antivirus dashboard where you regularly monitor within your system which computer has had how many virus emails and who did what and so on. I mean, this is similar. However, the subject you look at is the publicly available
Yes.
blockchain, and each client of yours defines which
They
smart
are-
contracts, which wallets to look into, right?
So the nature of the Web3 projects being completely transparent. There are some projects that are covering their infrastructure, but at the same time, their actions are also publicly available. What does it mean? That we can oversee them, but we can not give you the 100% confidence how secure is their infrastructure. It's just impossible. That's why inside the regulation, it's the obligation to give your infrastructure under monitoring to make sure that you are not doing some harmful actions beneath.
Do you get paid like per audit, or do you get paid like for the total value at risk, and then you get like 5% or something like that?
No, we are paid per audit, or with this monitor we get paid per volume or subscription, because there are very high volume contracts. So it can be one contract, but the amount of interactions and check could be crazy big. That's why it's or subscription based or volume based. With the audits, it's much more about language, complexity, and like amount of effort, human effort that needs to be there to complete the security assessment. Too technical, not
One question. If I think of being inside of one blockchain, it's something like a world, capsule world. But isn't there also a correlation between different blockchains?
Yes.
And can you maybe elaborate on that a little bit? I can imagine if you are in one blockchain, this thing is like a world I can a little bit like oversee, even though it is very complex. But what about the combination of 2 or 3?
Yeah, so basically why we are operating in 23 and we would like to operate on more and more and more, and we're adding blockchain as fast as we can, because different blockchain, they have different use cases, and the different blockchains are good for different things. But at the same time, in today's world, if you are very good project, you don't want to provide the value only on one blockchain. So most of the project, they're trying to operate at the same time on 5 or 6 different blockchains. That's why this type of system, we have a TVL monitor. It's total value locked inside your smart contract. And what is the behavior? That one smart contract is deployed on 5 different blockchains, and the logic is the same. And if it's happening that, for example, there is a vulnerability, the attack is very sophisticated, 0 day, they are very decentralized, but with the ability to stop the contract, if we are spotting the drop in TVL in value on one blockchain, we can, in the next block, stop the contract or pause the contract on all other different 5s or 6. So it gives you ability to save like 90% or 80% of all your assets. If you don't have this ability, if you're not prepared and you don't understand these use cases that are bases, you just lose all your assets, all your money. That's why it's so important, even for the startups, to understand the risks and the game that they are playing with blockchain. I don't want to scare you saying that blockchain is very scary, you don't need to build and interact with it. It gives you a lot of possibilities, of course, but it wasn't the topic.
Regarding this tokenomics, I do understand most of the others, but what exactly are you monitoring when looking into the tokenomics? If they just work as promised, or is it about burning mechanisms, or what would be?
Actually, all of it. With the tokenomics, we are monitoring the circulation supply.
Right.
We are monitoring how much tokens have been released from the treasury. Are they locked or not?
Yeah.
Because what does tokenomic means? It's the number of your tokens and some mechanisms that are promising to keep the value of this token at the certain point.
Yeah.
According to this tokenomics, your token or goes up in the value or goes down, and there are many factors. But inside your tokenomics promises a lot of factors that needs to be hold your value of the token not to go to the zero. So basically, we are analyzing it, and there was a case. Then, for example, the minting contract that gives ability to the team to mint more tokens were upgraded, tokens were minted, and then the changes were reversed. Of course, with the bigger supply, the value of the token goes down. And it's not what you want when you're investing in the project. So we analyzing a lot of factors, and yeah, something like this.
This is something from my point of view, which is pretty cool if you start comparing. So we invest in a token, and if you're a traditional investor that's doing small cap equities or whatever, you have analysts and you have auditors, and they look into the balance sheets of the companies and they tell you whatever promises the company has made, and if they are met, and what's the outlook, and what's the potential values, and so on. And in the token world, there's nothing like that, because first of all, the value of a token does not directly relate to the turnover of a company or demand or interest rates, or that's entirely different. However, in many cases there is an intrinsic value of a token, and to have tools for us, for example, as an asset manager, to say we did not randomly just pick this token and it's a meme coin, but it quadrupled in value and we are lucky and please give us more, dear investors, but to have some systematic approach in understanding what happens, and at least is the volume that's on the market, is if there's a burning mechanism, if there's a lockup mechanism, if there are certain metrics that identify or that determine if the underlying project is still working the way it should.
Yes.
And we more and more see projects that have clients, that generate revenue, and you see that not from the annual accounts, because they don't publish any annual accounts, but you see it on the blockchain. And being able to do this in a way that creates investor confidence, from my point of view, is quite cool. And I mean, it's relatively new. There are no standards yet. There's no.
And there are dozens of risks inside. For example, when you're investing in the project, you want to understand how this pie chart looks like. What is the share of the tokens that are distributed to the, for example, founding team?
Yeah.
What is the share that is allocated to investors? What is the shares that are allocated to the community? What is the treasury that is locked? And even your analysts, they can do this analysis once a week, but it's not enough, because you want to understand the changes almost in real time. Because, for example, if you come next day at work and you see that the share of the founders shrinked and their tokens were sent to the centralized exchange, they lose their confidence in the project that they are building, and they are trying to exit as fast as possible. Not a good sign for you. And you want to know about this as early as possible to have a conversation with them, not in a week or in a month or something. You want to know about this immediately. Yeah. And it's not only about the founders, it's about the attacks that are happening. Because if someone got to the minting contract, they can mint, and just your value of the token or value of your shares are going to be
nothing.
Are you going to elaborate a little bit on the direct reaction
I can
time
share
of that? Or any further questions? Because I think we move more and more to the second part where we hopefully have beer and many more questions that are a little bit more
Can I
individual.
ask a question? Are you going to release some features that can monitor if this project has some sort of wash trading through market makers?
It would be very hard to analyze. We're trying to do this, and it's on our methodology, but making sure that we are confidently saying wash trading, it's hard.
What about connected wallets?
You definitely can now build it by yourself, using the system and labeling the wallets and creating it for you. We don't have now.
Inside your interface.
Yes.
So
we
it's
don't.
possible to mark
Yes.
all wallets?
Yes. You can mark all wallets, and you can build the circulation supply by yourself
But you
to
you
any
have an
project.
automated cluster analysis?
No, of course,
Okay.
because it would be there are companies who are doing this,
Yeah.
but to each new project, it's just not our job. We are
Yeah.
focusing not on this. Yeah, basically that's it. I don't want to elaborate on the actions because it's just very technical interface. I don't think
Okay.
that it's going to be valuable. If you have any questions, yeah, it would be much better to answer them.
I mean, do you also monitor external factors like, for example, this mixer? Yeah.
Yeah, of course. Yeah, I completely forgot about this. So basically what we are doing right now, not analyzing only Web3 interface, but analyzing a lot of Web2 interactions. And like utilizing AI is even on the analyzing the sentiment analysis of the project. For example, we are monitoring Twitter sentiment. We are monitoring different blogs and mentions. And if we see that there is a very negative sentiment and we try to alert and put our eyes on it, why it's happening, what should the reaction be right there? Because, for example, NIST alert, it's the community of the cybersecurity experts who are submitting the latest cybersecurity incidents in the Web 2, not related to the Web 3 at all. But as I said, 70% of any infrastructure of the blockchain project is a Web 2. So you need to understand this. You need to analyze it. You need to filter all this buzz to understand, is it related to your project, and understand, okay, this vulnerability is this library, do I using it in my project? Is it related? Should I send an alert? And how, with what severity should the alert be? So it's also like trying to utilize all the AI capabilities. And with the agents inside, we want to get to the point where you are not going through this technical interface, but just writing, this is my project, analyze the functions of my smart contract, and set up the best protection possible for it. And it goes and automatically creates for you the proper infrastructure and the proper detectors that you need to apply. It's not easy, it's still very, very technical, but if you're not doing this, you are definitely not compliant and you are putting your customers in very high risk.
And one question. I understand you find the vulnerabilities and you find maybe an attack. How do you help the people who recognize the attack? I think because this comes back to the human. You see the attack and now you must decide what to do. And what type of help do you give there?
So basically, then you are sending, it's the new infrastructure, then you are sending the alert, you are sending this alert with the explanation why you believe that this attack has a critical severity. Mm-hmm. And by having this explanation, you as a customer definitely need to stop doing what you are doing. And definitely need to understand the root cause analysis, or we are providing you with the support from our cybersecurity specialist or if you are big enough, you have your cybersecurity team or your people who are responsible for this, who needs to take a look on this. Basically, this is the logic. Our goal is to, in real time, give you the information that you need to react. And we try to filter all the mess and the buzz that is there to minimize false positive as much as possible, of course.
I just mean that there are clear procedures in any case how to react on your good advice. The problem, I think, is if you go in a typical organization, there are humans, they are on holidays, there is maybe a computer,
yes,
an update program running, or whatever. So there is this typical things which are maybe down to the earth, and I would think it is very important, even though I know there is a big attack, how do I react? Whom I do have to call? What is this procedure after that? And do I really have to cut down the whole system or not?
Yeah, that's why even inside DORA, how it's what are the requirements right now? You as an organization need to list all type of your assets. What type of assets do you have? Your website, your DNS, and everything that you have from the IT infrastructure. After that, each asset needs to have an owner who is responsible for this asset. And after that, you are listing all type of risks that are there, so you understand them. Mm-hmm. With the understanding of the risk, you're creating this incident response plan. It should be written, mm-hmm, and it should be built. So basically, if you're seeing that the number of assets on my smart contract is dropping, and there is in one transaction 10% of my assets, you can automatically implement the reaction that the smart contract needs to be paused. So it's your preparation before the incident. Because if there is no preparation before the incident, it's too late. Yes. Sorry. There's no chance that you can quickly do something during the incident. There are war rooms and like a lot of support from the community, but the key that you need to understand it before incident is happening.
Yeah, I mean, I think we have to be aware that this is all so new. In the traditional banking sector, each and every process is documented, and there are certain standards, which is a 4I principle, or just different departments that do the risk assessment and the decision making and so on. And in the Web3 space, there's nothing like that, and players try to establish pretty basic things like, so every time we do a transaction of more than 10,000 euro value, we do a test transaction of €1 and just get the confirmation if the transfer has properly been received before we do that. And prior to interacting with a DEX, we look at it, because currently there is no ISO standard, there is no regulator saying this is a good decentralized exchange and this is a bad one. And the more we have services like from Extractor, we will be able to establish standards, and then at some point in time there will be a mutually accepted, yes, rating score for providers of smart contracts, and then we can start defining that with smart contracts that have a AAA rating, we do up to 10 million a day, and there are other smart contracts that only a B rating, and they are less eligible. But all this is developing. It's a complex. Well, the complex part of it is it's all digital. Everybody can see it, but nobody can understand and oversee and extract the relevant information out of it. And yeah, I think that's essentially the crucial and the fascinating part of what you're doing.
There are different types of ratings, and
okay.
you can oversee on the different platforms. This is what we were been doing for.
So these are
Time?
centralized exchanges.
Yes,
Yeah.
this is the rating of centralized exchanges based on the methodology. Do they have a penetration test? Do they have proof of reserves? Do they have bug bounty? Is it
Yeah.
relevant?
But
And
AML is.
AML wasn't in this part of methodology because this methodology was only on submitted reports that exchanges are submitting, and this rating is part of CoinGecko. CoinGecko is the second biggest aggregator of the all B2C community in the world. There is 40 million monthly active or 60 million monthly active users there, and because it's important to the exchanges, they feel this pressure. They are submitting their penetration testing, they are submitting their proof of reserves, and I want to tell what's proof of reserves for the centralized exchanges. If you who use centralized exchanges today here? Do you use them or not? Anyone else? No? Basically, what's the centralized exchange? They are taking your money, they are giving you some wallet, but you are losing trace of it. It's not a blockchain. They are holding your money on their own accounts, and you don't see what exactly they are doing with them. This is the reality of the centralized exchange. But there was a huge scandal with the FTX, if you heard about this in the US, that exchange used money of their clients for their own purposes. They were trading, they were buying, they were sponsoring, and it's in the Web 2 world, in banking world, it's crazy how it's even possible. But in Web 3, it's still very hard to convince exchanges that they need to submit proof of reserves. What does it mean? That exchanges are signing the transactions, showing that they have this money on their wallet. After that, they are showing their liabilities, how much money they own to the customers. And by verifying that they have more money than they have liabilities, they are saying that, yeah, you can trust us because your money are safe, we are not using it. It's part of the MiCA license as well, but during a very long period of time, no one even asked about this. And you had no idea what was reality inside.
Is it possible through your solution or through Hacken to have a proof of reserve?
No, it's not. We have the detector of proof of reserve, but only at the case when exchange is submitting this information. Why? Because you cannot first know all the wallets of the exchanges, and you definitely don't know their liabilities. If they are providing this information and it's publicly available, we can constantly monitor it and report if there is some violation. But it's not possible to verify something that is hidden from public. And centralized exchanges are not showing everything that is happening inside.
How about stable coins? Are you looking into the stability, credibility, and?
Yes, there is a separate. It's not released yet, but there is a separate methodology on the stablecoin and how you can oversee it. It's also about actually the balance between what they are holding and how many tokens they are releasing. So it's going to be much easier because it's much more public. But I believe Moody's released a stablecoin rating and methodology.
How do you find the right balance between not allowing too many false positives and false negatives? Like, because the false positive is bad, but arguably a false negative is way worse for your customers, right? So how do you find the sweet spot?
It's just exactly. You just don't know till all the detectors should be battle tested. If it's not battle tested, you cannot tell it. So only with the usage, only with understanding the data and constant improvement. Otherwise, it's impossible.
But do you have a solution where there is some sort of oracle or some sort of direct access from your solution to the contract to stop immediately block of the contract?
Yes. So basically, how it's working, you, if you want to use the functions automatically, you need to give permission to our contract to execute this exact function. And we are funding this contract by ourselves, so we are not holding your money. But for example, your contract has 3 functions that you want to automatically execute. It's three contracts inside our system that are executing, and you are giving to each of them small permission. If you want to execute simulation and filter the transaction, you need to change your contract and to implement our piece of code to give us ability to understand all the transactions and to filter them. It's less decentralized, but much more secure.
Are you then the full validator of the contract? Can you change anything in the contract at any moment?
We are not changing, we are executing only the transaction that you allowed us to do, of the functions. We can pause any transaction that is going through your contract. That is why it's decentralization, because we need to verify and sign transaction to pass through.
So I need to whitelist some contract address inside of my address, something like this?
Functions, yeah, give permission for our functions.
Okay.
All right, I think if we go too much into detail, we have come to an end of the kind of official.
What happens when, sorry, just one question.
Yeah.
What happens if you sign the transaction that at the end of the day gets false?
We very badly did our job.
Yeah, but do you take responsibility, and do you pay out the customer?
In reality, it's just impossible.
Yeah, okay, but
But is there some
in case it happens.
assurance that
we cannot give you this assurance, and the company who is providing this, they cannot also give the assurance to their customer, because the technology is so new. This antivirus today gives you assurance that there would not be a bug in your computer. For example, if you're a banker and because of some virus, you blocked, I don't know, million of funds. In Web 2 world, you can restore it somehow. In Web 3, no. That's why it's impossible to give assurance. There were at least 4 companies in insurance field who tried to operate with the Web 3, but the risk of the money lost is so high that till now all of them are failed, and they're starting new one. For example, we are in the middle of the conversation with a UK company, insurance company, who are saying we want to give discounts for insurance to the company who use your solution inside their system. We are happily going to work with them, but it's impossible for us to get responsibility on the lost money, because we can monitor millions and hundreds of millions of funds, and it's not our funds, and it's not funds even of the company. It's the asset managers, it's communities. That's why we want to minimize risks as much as possible.
I do see some similarity to the rating agencies, which look at a different sector. However, they do an assessment, they come to a conclusion which is AA or whatever, which somehow translates to a probability of default of 0.01, which does not mean they guarantee that this company will never fail. However, they give you an estimate and make it more predictable, which essentially is what, if I manage money and my client tells me, all right, I have a willingness and ability to get it to lose 5%, then I know how to allocate. And I think this is a little bit the role. Is it in line with the kind of...
Our goal is to give as much knowledge as possible to minimize the risk.
Yeah.
But we cannot guarantee that there is no risk. You are working in the field that is going to be at the risk during very long period of time.
Yeah. So, final question. what of your services is available to everybody online? What does it need to become a customer, and how
We
what
are
do I get?
releasing right now the new plan for the extractor that gives you ability to use. Now it's 30 days trial, but we will give you ability to fully go and to use with some limited capacity the monitoring. Basically, you can monitor anything inside blockchain with your own wallets that you want. With A3, we are working right now only under individual subscription and individual requests from the asset managers or the regulators. Yeah, basically that's it. And with the CER, we're also working with pretty big funds who wants to understand even risk of centralized exchanges. And we are making some deep research with that.
Perfect. Thank you very much.
Thank you.
Please, everybody, grab something to drink. Please don't leave any food back here because it will be gone. And thank you again for coming over. It's the first time for him to be in Hamburg. Everybody wants to show him around tonight. Please approach him directly. Unfortunately, I'm not available tonight.
If you have any additional questions, I'm very eager to answer them. If you want to understand more, I can give you any type of contacts to have a communication after.